me and my forward-looking indicators, it looks like it's all about to collapse. That's growth is going to collapse. Now, the markets might get a bit unnerved by that, but again, usually they should look forwards. When I think the reality is they're fighting the wrong thing. But oh my God, ChatGPT comes out, and everyone goes, oh my God, the world's just completely changed. Last year was a massive withdrawal of liquidity. All the money came out, the central banks were tightening rates, all the banks stopped lending money, all of that stuff. And it meant that all assets went down, and crypto goes down the most because it's the kind of longest duration, highest risk asset. So where are we now? So here we are right near the end of the rate hikes. The economy is probably going into recession and pretty soon. And so what happens is the markets start to look forward and say, maybe they'll stop tightening liquidity and take the foot off our necks. And maybe things, because our job in financial markets, particularly in macro, is to live in the future. Looking around today is useless. But looking around, what is the world going to look like in 6 months' time? Are the Fed raising rates in 6 months' time? Almost a 0% chance. Because inflation has peaked, growth is falling, we're going into recession. Normally, they would cut rates at that point. Now, they might be a little bit slow to do that because they really, really want to see inflation lower. But it means that the rate of change of all these rate hikes and all this bad news starts slowing down. And so we're going to get to the point they're going to say, okay, enough. Meanwhile, China's been leading this. The Chinese economy seems to be a year ahead of everybody else's right now. And they started some stimulus process before their lockdowns. And now they've really started to stimulate because, they'd shut down their economy. So we're already seeing this global money supply, and people can see me post this on Twitter from time to time, global money supply year on year and Bitcoin price year on year. They mirror each other. So when liquidity starts to come back in the system, prices start to rise again. So we're at that point, which is why I've been really interested. So in crypto, we've seen that I thought June was the low, and it was in ETH, some stuff, other stuff, no. But the point being is we've thrown the worst possible news. Prices kind of stopped going down. And now we're starting to see liquidity when everybody else is saying, can't you see, you idiots, you're going into recession. How can you own JPEGs when you go into recession? The point being is our job is to look a little bit further into the future. Certain things going on. One is that things like retail sales are driven by the total amount of volume of goods. Now, because prices have gone up a lot, the volume can have gone down and it still looks like, hey, presto, everything's okay. But it's not. Everyone's selling less stuff. So there's these weird things around inflation that we've not had to deal with. And unemployment's a bit sticky, but GDP growth is still, by last measure, still positive. We had a couple of scares, a scare earlier last summer. But for me and my forward-looking indicators, it looks like it's all about to collapse. That's growth is going to collapse. Now, the markets might get a bit unnerved by that, but again, usually they should look forwards.
Is there a decade you would compare this particular recession, this particular era to in history?
Most people want to go back to the 1970s because that was the ghost of the baby boomers past, right? So that's why J. Powell, classic baby boomer, his ghost is, I'm not going to be Arthur Burns. I'm never going to let inflation come back. Right? That kind of weird inflation went down, then went up, then went down, then went up, was, I think, a demographic phenomena by these baby boomers, right? They all came into the workforce at the same time. They're all about 30 years old when that happened, and they all started, they were in their 20s and 30s, and they all started consuming stuff, and it was the largest population bulge in all history. I think the actual best comparison is post-World War II. Now, we're going back a long way here, but why World War II? So the pandemic shut everybody out of the workforce, and factories couldn't produce goods any longer. So we have this supply issue, and everyone came back out and went, I want to buy stuff. I've been locked in my house for so long. World War II was that, but bigger. And so what happened is all the factories were making munitions, and now they had to suddenly spin up and make washing machines, and it took them ages to get everything sorted out, and supply chains were broken, and the ships were all blown up, and all of that stuff. But people came in and they wanted to buy stuff. They had some optimism again, and prices rose 20%. So CPI inflation got to 20%. What happened 2 years later is it went negative, because this wasn't demand-led.
Right.
It was just this weird supply-demand imbalance that happened for a short period of time. The Treasury raised interest rates over that period of time. And what happened was inflation did come back in the next business cycle, but they realized that it was due to this kind of still weird imbalance left from World War II, and they actually capped yields. They didn't allow interest rates to rise the next time around because they realized they'd screwed up the first time around. And it's the same thing here. I think we're fighting the wrong ghost, the ghost of Arthur Burns, and that everybody wants to be Volcker, and Jay Powell wants to have his book put out of, inflation killer. And so he can look proud to his kids, when I think the reality is they're fighting the wrong thing. If we think about inflation now, well, we've got a bunch of really older people, which are the baby boomers, who are coming out of the workforce in record numbers. Labor force participation rate, i.e. the number of people in the workforce, is shrinking. And then we've got globalization plus technology in the middle of all of this. And that means that, generally speaking, we've seen this bloody ChatGPT 3. And then 3 weeks later after that interview, that everyone was like, oh my God, ChatGPT comes out, and everyone goes, oh my God, the world's just completely changed. And how disruptive is that for jobs? How easier is it? You can write marketing copy and, at scale, all sorts of stuff. And it's like, okay, this is what I keep talking about with this exponential technologies. They replace jobs. If you look at Amazon's workforce, there's 1.5 million people and 500,000 robots. Now, the robots work 24/7, 365, and they're probably more productive because they don't have bitching sessions behind the water cooler and all of that stuff. And so they're cheaper. They're cheaper than people. So Amazon will just keep adding robots.
We had this unprecedented almost growth period led by zero interest rates. That means the crash has to come really hard. And we need to have this extra hard reaction to that in the form of something like 2008. And I understood that story. You don't agree. You don't think that's the story that's playing out right now. Why was that story wrong? And does that mean we're still at some point due for a recession on the order of 2008?
No, I think we have a recency bias. So we talked about the Federal Reserve with their one ghost.
My ghost.
Right, the ghost of your generation is 2008. The ghost of my generation is 2000. All these VCs who are a little bit older, who are in their kind of 40s, they're like, oh my God, this is 2000 all over again. Tech crash, everything's going down 90%. Everybody else is like, well, obviously, what a recession means is that all the banks go bust, everything goes bust. That's not normal. My first recession was 1990. Stock market went down 28%, GDP growth contracted by 2%, house prices fell, and people got tipped out of jobs. Standard recession. Lasted a period of time, the world moved on. That's what I think we've actually got here, is a very ordinary recession driven by Federal Reserve raising rates and prices going up too fast, which means that people can't buy as much stuff because your wages aren't going as much. And so everything slows down. Where's the big imbalance, right? We don't have this, the banking system got sorted out a lot. They're just not allowed to lend as much money. So we don't have those imbalances. So it's very hard to see what's really going to blow up. Now, the bears who are still going, oh my God, this is the worst thing ever, are saying, well, earnings need to come down further. And therefore, we've got another leg lower. This is 2000 all over again. We're just not the same level of overvaluation of stuff. Yeah, we were overvalued, but that whole COVID boom has come off. If you look at something like ARK, it's gone back to where it was. Crypto has corrected to the bottom of its logarithmic channel. Everything's got back to where it should be.
How you're feeling about NFTs these days. Has your thesis changed at all over the last year and a half, 2 years, whenever you first really started getting into NFTs, social tokens, the bear market, and where we are now?
So I think the social token thesis still stands, but it's harder to execute for people. So I do think that many communities will be tokenized communities, these digital nation states that I've talked about and Balaji's talked about, all that kind of stuff. It is coming, but I think what people have found is securities laws and other stuff make it easier to use NFTs to do that initially. So you can start with a smaller nation state by using NFTs. So I think we've seen that, and we're seeing the ability to get NFTs out at scale for very cheap prices. And Ticketmaster are the first people to really do that. I mean, they've got 10 million NFTs out, which nobody realizes, right? Nobody realizes we should be thanking Ticketmaster. We're too busy shouting at them over Taylor Swift gigs, but really, Ticketmaster did a phenomenal job getting tokens into people's hands. So I think that kind of free giving out of NFTs is the new brand marketing unlock, and it's going to be huge. I'm sure Tarek, when he comes, who is my colleague at Science Magic Studios, is the president of Science Magic Studios, the business I set up that's based around this, he'll talk much more intelligently about it than I will. So NFTs to me still remain a really big thing. So I think ticketing is a huge way of giving it to a lot of people. I think digital identity is the thing we have to solve in 2 years. So that, whether that's, and it probably is an NFT now, and it needs to have a zero knowledge proof. Why is that so important? And why is it such the biggest thing in the world is we're going to the US election in 2 years' time, and we've just unleashed open AI. We can make text to video instantaneously. And within 6 months, Ahmad and their stable diffusion stuff is going to go exponential with that. So we can basically create any video content we want, and we can create deepfakes. So I can have Carly shilling, US government bonds instead of JPEGs, and there's nothing you can do about it, and nobody's going to know whether it's authentic. So we don't know who's authentic online right now, and then we don't know what content is authentic. And it can be same with audio. If you saw that audio podcast between AI Joe Rogan and Steve Jobs. Okay, so and also GPT-3, ask it to write an article in the style of the New York Times, and it does. All you need to put is branding on it. I put it on my Twitter, say, hey, look at this article in the New York Times. Biden's agreed to nuke Russia. Right? Nobody knows what the fuck is true. Right? Going into an election, this is a huge societal problem, because we've got state actors involved in this as well. So we've got a lot of bad players who can leverage this technology very quickly, and nobody's ready for it. And I think the only way of dealing with this is authentication of content. So therefore, and authentication of people, which I think is an NFT use case. So I think it's urgent, and I think it has to come from Google, Amazon, Meta, and the big players, which I know nobody wants to hear, but it's the only way of doing this fast enough. But for us with bags, this is good, because we're onboarding people in a way that has to happen.